Hello and welcome back to Off the Record with ETX Capital. I'm Andrew Sachs. I'm joined once again here in the studio in London by Dan Moczulski. Hello, Dan.
Hi, thanks very much for having me, Andrew.
Great to see you here. And actually, it's very interesting. We've talked about this a few times over the years, how things have gone global. Here in the UK, I think I was very impressed with your off the top of your head knowledge of the investment trends data, the most recent investment trends data, showing the distribution of traders in the UK and how many, what type of traders are trading, what type of assets and so forth. Something like 150,000.
I think the last year's numbers was 181,000 leverage traders.
Leverage traders, yes, and it's gone up. It was a lot less than that last year.
Yeah, that's true.
So interestingly, and this is something that will definitely chime, is that out of that 108, I did some research about 2 years ago when there was about 140, 150,000 active leverage traders in the UK. Manchester is a centre for traders.
Really?
Whereas London might well be the place where all the brokerages are and all the financial markets infrastructure is, but there are in 2019, there were 29,000 active traders in Manchester.
Well, I am from Bolton, which is
part of Greater Manchester.
Manchester.
Yes.
I would not have guessed that there were so many traders within Manchester.
Yes, apparently so. So they don't; these traders don't look to London as being any specific direction for them. They're doing everything from Manchester on British, London-based platforms.
You know, kind of let's agree that there is no reason now why you would have to be in London. You know, I can absolutely buy into, 20 years ago, 30 years ago, if you were wishing to be connected to financial markets, it would make sense for you to be in London.
Yes,
but that's not relevant.
No, it's not. You'd either have to be in Slough, where the Equinix hosting server is, or you'd have to have a very expensive dedicated point of presence connection to get you to to get you dedicated internet traffic. No, you don't.
It's not relevant anymore.
No, exactly. And it's a global business model. Despite the individual regulation for each country, everyone in our industry was focusing on how to build technology that satisfies all the very strict rules about regulation. But despite that, it is a global business that's operated locally.
Do you know what's really, I feel, if we're going to say what is the progress of brokerage over the next 10 years, I think it's becoming increasingly globalized. And I don't just mean that in the sense of a person from Manchester trading on UK stock. I think of it as a person in Mexico buying a German stock.
That's right, yes.
A person in Germany trading on a US stock. A person in Australia trading a UK stock. You know, and what's happening for most brokerages at the moment is they are turning on more and more exchanges for their entire client base.
They are indeed, yes.
You know, and it's really, there's been a dramatic change over the last, say, I'm going to say 3 years, but perhaps over a longer time, maybe over the last 10 years, that what used to be the case is where you, look, my background for the first 10 years was a IG group, or IG index as it was at the time.
Yeah.
And in 2008, we launched, after MiFID, we were able to launch in Spain, Italy, France, Germany, and a range of different European countries that were given access to. And the most important component of each new market was to offer the components of the main index. So the local market tended to trade the local stock.
That's right.
And perhaps their local currency. So obviously it tended to be the euro. In the UK, it tended to be sterling crosses. But over the last, say, 5 years, that has dramatically changed.
It has. And there are companies which are considered by perhaps their traders or by people in the industry as being pigeonholed into one area. But the reality is their actual asset base is somewhere else. For example, Swissquote, which is a huge company, Swiss bank, and everyone thinks, oh, it's a Swiss bank, which it is. But the majority of its CFD trading is a tiny bit of its business. The majority of its business is US equities, all traded on Chicago exchanges.
I have to say, eToro is very similar in that we offer, kind of a very wide range of stocks in each of the countries that we operate, and we have multiple exchanges to facilitate people who want to trade their local markets. But I have to say, Tesla dominates in most of these markets. NEO might dominate in these markets. It's interesting how, at the moment, we are gravitating towards US markets, and I feel that this will be.
That's because of all these tech listings that have come onto NASDAQ recently.
Absolutely, but don't you see, Andrew, that I think it's got now. It's either a virtuous circle or a kind of vicious circle, that we're going to have this situation now that because it's so much easier to trade US stocks, it becomes attractive for people to list on US exchanges, and therefore it becomes even more attractive to trade US stocks.
That's right.
So it's really interesting now how we're moving away from the localized stock exchanges to moving to trading a global product. And maybe again, and I've repeated this throughout the programs that we've done, this concept of communities, maybe we're less bothered by the country that we live in and more bothered by the community that we feel part of.
That's for sure. If you look at some of the coverage, especially since January, since these meme stock short that caused so much volatility, and it kind of redesigned everyone's mentality around the fact that we've now got these meme stock influence, the ability for people, individuals and social media users to influence entire markets and actually control their brokerage to some extent and control the market. They are not thinking, none of them are region specific. You never see a board on the internet of New York stock traders or Chicago-based derivatives exchange traders. That's how it would have been when chat rooms were invented in the 90s, and things like ICQ were invented, which is an instant messenger that got sold to AOL. That would have been how it was. It would have been, groups would have been called something like NY stock pickers.
Sure.
And they'd be New York traders talking about Wall Street stuff. Chicago would be a boys network, like an old school network of listed derivatives and futures traders who've been around for years. And it would be a closed club of them who live in Chicago and they only trade on Chicago exchanges. You see now, brokerages and the boards that influence them, no one talks about region. There is no one even talks about you mentioned MiFID earlier, which is the markets in infrastructure. It's the infrastructure directive for European brokers, where they have to stick to certain infrastructural rules. That was a huge subject in 2017-18 when the second generation of that was coming up. Brokers were rallying to get their compliance systems up and running for that and to meet the criteria. No one talks about that anymore. It's all completely borderless. It's all about Reddit boards, and people on those Reddit boards have got pseudonyms. They might be called Stock Picker or something. They call themselves something. No one knows where they're from. They could be in Mexico, they could be in Europe, they could be in Asia Pacific, and it's all done on a communal board of international people, and the brokers have to serve those people now.
Agreed.
Which is one of the ETX Capital used to have is going back to Europe now as well. So it has a European licensing in Cyprus, but we're expanding the German language aspect, the Central Europe, and so forth. So that because it's a global business to an extent where yes, it's a British company, but it has to be able to. We have to be able to understand that there is an audience that doesn't mind where the company is based anymore. It's all about having a trading platform which can access multi-assets at any point in any time, and they are focusing on internet memes and boards and on immediate news flashes and all these meme stocks are being, like you say, are being listed in the US. They're being listed in NASDAQ because NASDAQ has a very easy approach for SPAC listings. So it's always been one of the most preferred exchanges by tech companies. It's a lot of high tech listings on NASDAQ. So NASDAQ exchange doesn't mind lots of tech SPAC listings. So all of the idea is it's US listed companies like that, US tech companies, but the actual trading entities, the brokerage and the traders could be anywhere in the world.
But I think it's important that actually global exchanges react to these changes, because you're right. When people want to trade a particular market, they don't actually care what exchange it's listed on.
No, they don't.
They don't care, kind of where the broker operates from.
Nope.
They don't care largely where it's regulated. What they care is about getting access to the
That's
asset
right.
that they wish to
That's
invest in.
absolutely right.
And that's the driver for what they want to do with the brokerage. So it's a dramatic change to where we were 10 years ago.
It is, because if you think about 10 years ago, people used to talk Chicago Mercantile Exchange, CME. It's now just called CME because it also behaves like a tech entity in its own right. It calls itself a tech provider and so forth, which it is.
Yeah.
But back 10 years ago, if you read news about something that, if you even their PRs or something, prestigious exchange, CME Group, Chicago Mercantile Exchange, one of the prestigious exchanges. You'll never see that anymore.
No.
It says CME and then something to do with technology. Or it doesn't talk about Chicago. It doesn't say it's a prestigious exchange because nobody cares. They care about access and what you can execute on what at what particular level.
And also you go as far to say, as you say, that if you explain to somebody, you can't have access to that stock because it's listed in this particular territory, that's an irrelevance.
Absolutely.
And they will go to the brokerage that allows them to trade that market.
They
Hence
will.
why eToro has these connections to so many different exchanges, because that's what people want.
Yes, they see anything, rather than talking about what is more prestigious. No one cares what is NASDAQ or what is Singapore Exchange or something.
Sure.
They want to see where they can get it. And if you can't, it's considered an obstacle. So, for example, in Dubai, this is something which is a bit of a side issue, and this is something I'm not really into, but the Dubai
I'm wondering where you're going here,
Well,
Andrew.
That's the thing. That is a relatively new exchange. It doesn't have hundreds and hundreds of, it doesn't have 400 years worth of corn trading behind it, or from the raw materials industry of the pre-constitutional United States, where European settlers harvested corn and then went to Chicago and sent them on an exchange where bidders then bidded for them, and then it was all shipped to Europe. That's how the Chicago exchanges. And then they became, over the years, open outcry pits, and it's got a long history of being a commodities trading centre. Same as Sydney in Australia for the same reason. Along comes the Dubai exchange just within the last 10 years or so. It's a recent exchange, very low. It's not even one of the premier ones. But the Indian rupee contract, futures contract, is huge on it.
Yeah.
So that is something which you can trade on pretty much every platform everywhere in the world, and that is something which, without that, the DGC, the Dubai exchange, wouldn't exist, because that's the only thing it really benefits from. So all that accessibility, traders don't care. They'll go, if they say there's an Indian rupee futures contract they want to trade, they go to CME Group. Do you offer that? No. Who are CME Group anyway? No one cares.
Sure.
They'll go there, even though it's only been around 10 years, and trade it. Because it's all about accessing multi-assets from one platform.
Agreed. As you say, the shop window now is the platform that you use.
It is.
And
right.
You want to be able to choose the widest range of assets. And also as well, Andrew, it's not just the assets, it's the way that you trade those assets. So, for example, if you are looking to purchase or make an investment and you are looking to hold that position for the next 5 years, then you might be trading it as a physical asset. And so actually buying the physical asset and holding it within your portfolio. But let's say that there's a piece of news coming out, or there's an earnings release for a particular stock, and you're not confident which way it will go, but you're confident that if, as you say, that a particular new product has flown off the shelves, that you would like to have a kind of small leverage trade that has a tight stop loss, and if the news comes out that particular product has been a success, then it would drive the price of the stock. If you want to get exposure to that, then you might use a CFD.
Yes.
So it's important not just to have a wide range of underlying assets, but also a wide range of trading those underlying assets.
Yeah, I agree. The methods of trading and the ways that you access those assets should be also diversified.
Agreed.
So, as you say, it's a very good way of putting it. The shop window should be the trading platform, and it's our job to connect that to all the different exchanges. All the traders don't. Gone are the days when they actually cared about where things were available. Now it's our job to connect those dots, and then the trader goes to the platform having read something and gets an actionable piece of content to read about it from the platform.
One of the things that, this is kind of a side issue, but one of the things that's interesting as a provider, as a firm that has its own tech stack, and having previously been involved in technology firms that created trading platforms both for the web and for mobile, is kind of price navigation. How do people find the assets that they want to trade on? And what may have used to have been the method that people would use is they'd select London Stock Exchange. It would come up with all the letters that start stocks within the UK, and they'd select the market that they want to trade from there. But I think what's happening now is where it trades is an irrelevance.
That's
and
right.
They're just typing the name of the
That's
stock.
exactly right.
And it pops up with, right, here is that market.
That's it.
Do you want to trade it?
It's exactly the same as you going to Google search, typing in Daniel MOC, and then it populates your name and the rest of it.
There was not many of us. It doesn't
That's
have
right.
to work particularly hard
So
for
then
that.
it comes, I don't have to do any more than that. Click. And that's exactly how a trading platform should work.
Yeah, agreed.
Very nice, interesting stuff, and a lot of interesting future for us to pioneer, really, in the industry.
Agreed.
Good to see you, Dan. See you soon.
Lovely. Thanks for inviting me.
Great pleasure.
See you soon.
All the
Cheers.
best.